What's up, mortgage coach, trust engine community? I am at a sales rally for American Pacific Mortgage in San Diego, and I just ran into the #1 loan officer in the company. What's up, Kyle?
How's it going?
Going good, brother. So he told me you closed what, 36 loans last month,
Yeah, 36 loans last month.
which is crazy. And then I said, "How are you doing this month?" And you're like, "I think it's going to be my best month ever."
It's looking like it's going to be the best month ever.
So, so again, give or take a few loans, like the target is 47. Do let me know how you end up the month, but
Yeah, I'll let you know. But 47's the goal for this month is what we're shooting for.
And what kind of funnel do you need to have? You know, like TBD, how many pre-approved TBD loans do you have to drive that kind of volume right now?
So actually when I work through the numbers, we have about a 30% conversion ratio right now with the current market. So if you want to close one deal, I'm telling all my guys, you got to have at least 3 people out there being pre-qualified. So when I'm out there and I'm doing everything, so to do 47, I have 150 pre-qualified buyers out there at any given time right this moment. And, I plan on a 30%. I used to have a 39% conversion ratio. It was really awesome, but that was, prior to 2020 and some of the changes that market brought us. And it was really tough to maintain a 38 when people were getting priced out, because now you didn't have buyers that couldn't afford to pay over, and you had buyers that couldn't compete with some of the cash buyers. So that kind of brought down that conversion ratio. But we've kind of seen it tick back up now with the stabilizing of the market and things like that. And so it's been really great to have some of these buyers come back, and we've seen it come all the way back from about a 28% all the way back to around like a 31, 32%.
So by the way, takeaway #1, the dude knows his numbers. And I would push everybody to, what are your numbers? How many pre-approvals do you have right now? What is your monthly conversion? And then another really important metric is your past customer pull-through rate. How many people do you have in your database, and how many of them are referring you business every month, and how many of them are you closing every month, which is a really key. I think on the front end, it's measuring that front end conversion, and on the back end, it's always like, how do I have to optimize my database? So when I first met Kyle, he was introduced to me by Melissa, who's the chief revenue officer for the company, and she said, "This guy kills it with calling boomerang, trust engine boomerangs." Tell us your best practices there, and do you know how many of the loans you have going are from past clients or referrals from past clients?
So past clients, yeah. So a lot of my past clients come, it's about 25% of my current pipeline is past clients or past client referrals. And then the rest of it is about 15 to 20% of my own personal marketing, and the remaining is realtor referrals or other referral sources. But I'm finding that 25% is my past clients, and they're coming either via using Boomerang, and I'm monitoring what's going on there, and I'm reaching out to these clients saying, "Hey, like, I've noticed this, what's going on, let me know how I can help or assist." I had a client that actually I pre-qualified, helped him purchase his first home. He didn't use me on the second home that he purchased, didn't use me on the refinance, but he's using me currently right now because I call him. He goes, "Every time you call me," and I said, "It's because I'm looking out for you, man." And so I ended up getting his new purchase on his new house on this next go around.
Love it. Love it. So I've noticed you do a lot on social media. I did an interview on Tuesday, and the person I interviewed, Greg Scher, what's up, Greg? He had pulled a stat that over the next 5 years, Gen X, which is age 18 to 25, will buy 30 million homes. And I'm just like,
Yeah.
what?
Yeah.
And then he talked about how Gen X isn't using Google like they used to. They're using TikTok, they're using Instagram, they're using YouTube. They're and they want to do business with people that they watch. So is that why you're doing social media? Like, why are you building a brand and so active on social?
3 main reasons for that. One is I could see where the market was heading. A lot of people were saying, "Oh, I saw this on TikTok." Because it's like friends started sending me things about mortgage, going, "Oh, I saw this trend, or I saw this on TikTok. Is this true? Is this true?" I might got one today. A buddy of mine says, "Hey, is this true?" And I'm over here going, well, yeah, it's true. I knew about this 3 months ago and you're just now finding out about this, but like, why didn't you hear that from me? Like, duh, like, why are you not hearing that from me? That was one. And then two, I started seeing where I actually lost a deal where she found a loan officer on Instagram that was talking about something. So she went with this loan officer thinking I couldn't provide that same deal. And I was a little upset about it because I lost it due to some TikToker or some Instagrammer that was bragging about this cool program that she had and she thought it was exclusive to this loan officer. And I lost the deal because she went with some lady she saw on Instagram. And then the third reason was kind of a little bit selfish where like I've spent a ton of my time just working. I put blinders on and I just put my head down and I grinded and I worked and I built relationships in my local market. But a lot of people didn't know who I was. And so I went on a big, huge branding and I, came up with a social media handle and I just went all in on social media to try and build and continue that growth with that. And it's grown a lot. I'm up to like 1,400 followers now after like 6 months.
And mainly Instagram. Are you doing TikTok?
So we're doing TikTok, we're doing YouTube, we're doing
How do we follow
LinkedIn
you? How does people follow you?
at Mr. Loans.Mortgage on all of my social media
Mr.
platforms.
Loans.Mortgage.
Mr. Loans. Yeah, I actually wanted to go. It's kind of silly how that came about, but I was going to go with Dr. Loans or Loan Doctor because I consider myself like a little bit of an engineer when it comes to like structuring files and figuring out how to overcome problems or taking loan denials from other lenders and figuring out how to get them approved. And so when I went to someone, I said, hey, I want to become the loan doctor. And she's like, you can't do that because people, when they look for loan doctor, they're looking for doctor loans.
Right. You get a lot of noise.
And my wife kind of turned it down and my wife kind of joked and she's like, why don't you just call yourself Mr. Loans, Mr. Right, Mr. Loans. And I was like, it's actually kind of catchy. So I logged online to the Arizona Motor Vehicle Department just to see if they had the license plate available.
There you go.
And they had it with no characters on it where you could just do it exactly.
So boom.
MRLONS.
It was meant to be.
I was like, okay, it's
Done.
in, it's done. And that's how we got it done. But
I love that. Looks like the camera decided that likes you more than me, which is good. He is much better looking than me and younger. So that's cool. So now I know you're starting to use Mortgage Coach more. Like what's the why Mortgage Coach?
So Mortgage Coach, I'd heard of Mortgage Coach. I had developed my own little like spreadsheet that I had done for clients and not nearly as sophisticated, very raw and just basic numbers and just comparing options. And I'd use that for years, especially when, rates were super low and I can just get people options and I would send it out to them. And like 6-ish months ago, I was up against this other lender and he took my spreadsheet, and then turned it around on me using Mortgage Coach and used it against me. He was wrong in his analysis, but like the client used your technology and went, but he said that you're wrong. And he had a pretty graph and bars. And I'm like, but he's wrong. And I was like, you know what? Heck with this. Next time I'm going to go in it and I'm going to fight fire with fire, the same fire, so I can prove my point. And that's when, we connected and I was like, I got to get a coach to help me do this. And you had one of your guys hop on and show me how to do everything. I've been sending them out ever since then.
And you like it.
Yeah.
Like it's a better way to do things.
It's better for analyzing bigger picture, and having a system that can explain what I can explain on the phone, but it can show them rather than just explaining it over the phone.
Well, tell me if you agree with this, but I think in this market, when there's so many loans that are at 2% and 3%, you need to to get someone to move up. You got to vision cast. Not what does that mean for you this month? Because it's not be great. Rates are higher.
Yeah.
What does that mean in 3 years? And then I do think with Gen X and first time home buyers, especially if they're on the fence, we got to let them know, look what this means this month, but look what this means 3 years, 5 years, 10 years from now. So I think we're in an era now, I'm calling it the advice revolution.
Yeah.
Where, and to me, the definition of advice is where you're showing that decision in the future.
Yep.
Do you agree? Like it's never been more important.
It's super important because, I use this as an example all the time, but we're going to have to explain how rates don't matter. The house price doesn't matter. Getting in a home is what matters. You're going to build equity. You sit in something long enough and you're going to continue to build equity. And when I have clients that come to me, I use this as an example but I have two friends that both got pre-qualified at the same time. One bought a house and one did not buy a house. It's been 9 years. One now owns a $900,000 home and has $400,000 in equity in it. Another one is still renting and has no equity. Which one's winning right now? The one that has bought multiple houses because he decided to take the plunge. You know what? I'm going to suck it up. I'm going to pay $250, $300 more a month for rent and do this because I can see the long-term benefit of this, you know, for my future and my family. And here we are, 9 years, just in 9 years, he's built $400,000 in equity. And then the other one is still renting.
Yeah, and guys, you need to have stories like that. You know, I bet you've told that story before.
A lot of times.
Yeah, like I call those go-to stories.
Yep.
And then I also recommend you have those stories built with a TCA. And so that, you know, think of every total cost analysis is just a storytelling tool. You know, like it's not about the technology, it's about the story, and it just helps visualize that story. And so sometimes you're telling stories in the past for realtors, like, hey, realtor, this is how I'm going to help you put your clients under contract. So it's a story. And sometimes you're talking to a client, you're making their story for them. So let's break down some things. You know, I build this around how is Kyle closing 47 loans this month, and he closed 36 last month. And my takeaway is, first of all, he knows his numbers. So, and he knows he needs 3 times, whatever he's going to do. If he needs 50 closed loans, he needs more than 150 in his pipeline. So he knows his numbers. You notice he's getting business from realtors. 25% are coming from his past customer database. And then it's like you said, 15% is coming from, you know, the content he's creating, his consumer direct. So think about that. If you're competing with this guy, like even for a realtor, and think about what he can bring to a realtor. Like, your database is more valuable than my database. I'm building a brand. Like, he's going to get more business from realtors. So I don't know if it's going to be one last question or two, but I do want to know, what do you think is your superpower? Like, if there was one thing that you think is your superpower, what is it?
I don't know how to take a no. That's probably my biggest superpower. Even from the day one, you know, people say, well, you can't do that loan. I bet, well, why not? It kind of makes sense. Like, why can't I do that loan? And so I would continue to pound on pavement. And I mean, you can ask the underwriting managers here at American Pacific. They hear from me quite often. And it's basically not being able to say no to the client and not being able to say no to an underwriter and having them tell me no. It's don't tell me no, tell me how. What can I do? And
Solution focused.
Solution
Great
focused.
problem solver.
I go to a client when I look at a client's portfolio, unless it's like so far left field, right? I go, hey, you can't buy like right this second as you've submitted your application, but could you do this? Or could you do this? Or could you get a cosigner? Or could you hop on an authorized user and boost your credit scores up so you now qualify for this program or whatever, and give them the options? Because a lot of loan officers will just look at something and say, it doesn't work. Sorry, you know, you got to go somewhere else. And then they either fumble around and find someone like me that can give them some solutions. But a lot of times, if someone wants something hard enough, they will do what's needed to proceed forward and get that pre-qualification started. So I give them solutions and I gauge how they react to the solutions and what they do. Like, if they actually come forward and do the things I've given them, then heck, I'll bend over backwards. I'll break my back to get you in a house. So.
I can feel that. I can feel that you are that guy. What about, is there anything that it's not your superpower, but you want it to be like something you're working on right now, something to get you to the next level? Is there anything that you think you need to develop as a superpower to get to the next level?
Maybe some time management.
You're doing pretty good, man.
You know, right now I stretch myself pretty thin and I manage what I'm doing. How
many kids do you have?
Oh, I got 5.
Guys,
kids.
So wait a minute. Did everybody hear that? 5 kids.
Yeah.
We
just had our
47 loans.
Just had our 5th. She's 7 weeks old.
Yeah, I invited him to the Modern Mortgage Summit. I think you really wanted to go, but you're like,
it was the
same
week. Oh man, I would have been dead if I went.
Yeah, no, dude, we might consider you as a speaker for next year's Modern Mortgage Summit.
You let me know.
And I am going to be doing Scriptapalooza. We're going to be announcing every year. I think it's supposed to be the 6th Scriptapalooza. So you are invited on that if you can make the date work. So any closing thoughts? I mean, how long have you been in the business?
So technically last month I was licensed 8 years.
Okay, so still relative. You're not like, it's not 2 decades.
Yeah.
You know, you're not a brand new LO, but you're still to do this kind of volume. It's pretty fast. And I know that you're mentoring some new loan officers because you introduced them to me.
Yep.
What advice do you have to new LOs, whether they started this year or last? What's the little closing thoughts and words of advice for new LOs?
You got to become a technician. You got to learn how to make hard deals, especially in this market. You know, I would say last year and the year before, 70% of my clientele were high income, high credit score, large down payments,
Easy loans,
easy stuff.
cookie cutter.
And you have to learn to shift and adapt. You know, right now I'm doing leased land manufactured homes. I never thought I would do something like that, but you know, we are doing that. And you have to learn to shift and adapt and don't say no, find out how. That's what I would say is find out what you can do to get that client approved and get that client out there shopping, whether they've got to do a little bit of work or not, but don't, you know, learn to be a technician, learn to find solutions in loans, or maybe go out and find new type of loan that you can niche yourself with and an offer of array of assortment. And especially in this market where every deal is tougher and every deal is harder, you got to be versatile and be able to adapt to it.
So so first of all, yes, for new loan officers hearing this, but I think equally important, you need to be a great advisor. And two of the best scripts you can use to become a great advisor the fastest, and I gave this advice to two of his new young loan officers, is go to all your friends that are renters. And like I had these two new loan officers, they're in their early 20s. You know anybody who rents? They're like, yeah, all my friends. And I'm like, well, go to them, say, I need your help. I'm a new loan officer. Can I practice a rent versus own analysis on you? And do a rent versus own analysis. And number one, you will get some loans. You do that 20 times, you're going to get some loans. And two, you're going to get good at being an advisor, which I think knowing how to be a problem solver and knowing how to get deals done and knowing how to be an advisor are two critical skills. If you're a local referral-based originator, those are critical skills. And then go to all your homeowners and go, hey, I need your help. First of all, a lot of these homeowners now are going to be accidental landlords. So they didn't want to be a landlord. I didn't make up that phrase. I got it from a Fortune magazine article. Or they're household hostages. You know, like I want a bigger home. I want a different home, but I'm stuck because I got a 2% loan. Well, you know what? Go to them because they're friends. Like they're people you'd invite to your wedding and say, I need your help. Will you let me practice a move up analysis? I know you probably don't want to move up. I just need to practice it. And you know what? You do that 20 times, you're going to get some deals and you're going to become a good advisor. So closing thoughts, be a great loan technician that has skills beyond the norm, you know, get to being top 10% at that and be a top 10% advisor. And they'll be golden, right?
Absolutely. To touch on your point about the move up and people being stuck, I have tons of clients that bought houses 2 years ago and they've got a 3.125% interest rate. And I'm talking to them, they're saying, Kyle, I don't want to go get a 6% interest rate. And I said, you don't have to. You can go buy a new house, put down 5% down, get your 6% interest rate, keep your old house and rent it. But market rents are so far up that you're going to have a surplus of $800-900 excess on the house that you're leaving that you're now renting. Now you take the $800-900 and you apply it towards your